coverage of big tech earnings as Microsoft, Qualcomm, and Meta report.
This is a blowout quarter.
And now, Bloomberg subscribers can submit questions for our experts. Visit Bloomberg.com/AskRadio to send questions to our hosts.
Earnings kicking into high gear.
Your questions on big tech earnings live on Bloomberg Radio. A subscriber exclusive. Visit Bloomberg.com/AskRadio to join the conversation. Then listen at 4 p.m. Eastern on Bloomberg Radio.
This is a Bloomberg Business of Sports report. FIFA President Gianni Infantino has attacked perceived critics 1 week after the World Cup final for, as he put it, spreading hate and false rumors about the tournament. Infantino says FIFA delivered the best show in the world and spoke of the World Cup bringing joy and togetherness. In a 900-word statement published on Instagram and FIFA's website, Infantino wrote, "Sorry that you were so consumed by hate and criticism that you missed it all." Meanwhile, FIFA is working with J.P. Morgan Chase on plans to raise as much as $4.2 billion from external investors. According to a person familiar with the matter, it includes Jared Kushner's Thrive Capital among the potential backers. Leonte Carreu's lawsuit against Rutgers University was dismissed without prejudice by a judge due to his claims being time-barred. Carreu claimed Rutgers unjustly profited from his name, image, and likeness to sell jerseys and tickets. With the Bloomberg Business of Sports report, I'm Michael Barr.
You know, I used to think all money managers were the same until I spoke with Fisher Investments.
Really? How different are they?
Fisher's investment counselors are dedicated to service, not sales, keeping clients up to date on their portfolio.
Well, they probably just invest in a bunch of mutual funds like I do.
Nope. They build a tailored portfolio based on their clients' personal goals, helping them stay on track for a comfortable retirement.
Well, they must make commissions selling products.
Actually, Fisher doesn't sell any commission-based products. They're a fiduciary, and they believe that's a conflict.
Then they have some kind of complex fee structure.
Nope. Fisher has a simple, transparent fee that's a percentage of their client's portfolio. So they do better when their clients do better.
It sounds like Fisher really is different.
Couldn't have said it better myself.
Fisher Investments. Clearly different wealth management. Learn more at fisherinvestments.com/different. Investing in securities involves the risk of loss.
Join us for Bloomberg Power Players on September 10th in New York. Set against the backdrop of the U.S. Open Tennis Championships, Bloomberg convenes the leaders shaping the future of sports business. From athletes and team owners to commissioners and investors, hear the market-moving conversations driving the multi-trillion-dollar sports economy. Register now at BloombergLive.com/PowerPlayersRadio. That's BloombergLive.com/PowerPlayersRadio.
Now, your 3-day weather forecast on Bloomberg 92.9.
Low pressure is creeping our way. It's why we'll see some showers and thunderstorms at times the rest of the day. Heavy rain is possible, breezy 70 to 75. Showers at times tonight, chance of a thunderstorm 65. Scattered showers, maybe a thunderstorm tomorrow, breezy 70 to 75. Showers ending tomorrow night. Clearing on Friday, it'll be a little warmer, high 75 to 80. I'm Rob Carolyn with your 3-day forecast on Bloomberg 92.9.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Well, ahead of the earnings after the close of regular trading today from Microsoft and Meta, major stock averages, they are pushing lower. Meta is down 0.8%. Microsoft right now 0.3% lower. And as you just heard, I mean, the big focus, of course, is going to be on CapEx and when the heck all that is going to pay off. Paul, you're going to have to explain to the class why you're laughing.
Now I'm just getting lost in something.
Oil is higher, and ahead of the Fed decision, 2 p.m. Wall Street time, yields are higher. The more policy reactive 2-year yield, 2 basis points higher at 4.30%. Quick look at Ford, raising its profit outlook for the second time this year. Consumers continue to snap up the automaker's high-margin sport utility vehicles. I see the Ford Bronco like everywhere.
Everywhere.
And they're outfitted with these really expensive off-road, whatever you call it.
It looks great.
Wait, you're seeing this on the streets of New Jersey, so no one's actually doing this.
So you can off-road, I don't know, to the food town and pick up whatever. Anyway, S&P 500, 42 points lower. That's down 0.6%, 73.84 in the index. The Dow down 717 points. That's down 1.4%. And the NASDAQ 100 down about, let's say 10% from its peak. Right now, 230 points lower. That is down 0.8%. And we were talking about in the break, Hermes, the luxury brand, those shares fell sharply. That's because sales in China disappointed investors. Now, the CEO says if you want to get an idea when they're going to rebound, watch pork. Because pork's eaten particularly during banquets and at celebrations and at restaurants.
But everyone eats pork, and not everyone gets Hermes.
In particular, in China. So he says it's a good indicator of the desire to celebrate. I don't think so.
Pork is mass. It's for the mass consumer.
You're really massacring my story here.
Exactly. I'm sorry.
I was laughing at the beginning. Now she's contradicting. What's going on here?
The CEO of Hermes says when pork prices rise in China, that will be a good indicator of optimism.
I take issue with the CEO of Hermes.
Anyway, we check the market. We try to check the markets and other stuff.
Boy.
Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
Very good. John Tucker, we apologize. We'll be better behaved next time. Scarlett Fu, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. It is Fed Day. 2 o'clock, we get the statement. 2:30, we get the press conference. And at 1:30 p.m. Wall Street time, the surveillance folks, Tom Keene and the gang, will bring you full coverage there. Jeffrey Cleveland joins us here, chief economist at Payton and Regal. He's out there in L.A. Jeffrey, what's your thoughts here? I mean, we got some people out there that I think are pretty credible saying, don't be surprised if we get a hike today.
Well, first of all, hello. I feel nostalgic because I think this harkens back to the forward guidance days. I think you have to go back to a time before Bernanke was Fed chair and think about those meetings, and nobody knows what's going to happen. Anything's possible here, Paul, including a rate hike. I think that's possible. Maybe under priced by the markets for today. But I definitely think it's possible. And the reason why is just you have to put yourselves in the shoes of a policymaker right now. And you're looking out and you're thinking about where inflation is going to be at year end. And if you can make a credible argument, it's still going to be above 3%, then what are we doing? We're 5+ years of missing our inflation target in the U.S. So it's time to take action. That's how I would frame the decision today.
Okay, and of course the Fed has a dual mandate to maximize employment and to keep a lid on inflation. It's got that 2% target, and we're nowhere close to that right now. But the latest data prints, June CPI, for instance, show things moving in the right direction. Was that a fluke, or do we wait to see that confirmed by more data, even though oil prices have been all over the place?
Yeah, my gut is that the June CPI reading was a fluke. It was very soft, on pretty much all aspects of the report. We like to look at median CPI, the Cleveland Fed's tabulated median CPI. For the month of June, Scarlett, that was up 0.2% month over month, which it's good, but it's a more moderate pace of inflation, not flat or negative reading. So I wouldn't put too much. Also, I think if you're and not to belabor a point, but I will. If you're missing your inflation target for 5 years and you have one good month, that's not enough. You need 5-6 months of those 0.2, those soft readings month by month to really be confident that inflation is going to get back to the 2% target on a reasonable time frame. And I just don't see that.
Jeffrey, can you define what is the neutral rate and where are we relative to that these days?
Nobody knows, Paul.
I like the honesty.
Yeah, it's hard. It's really hard in real time to get an assessment of that. I think arguably in real time, people are underestimating where that rate is right now. Why do I say that? Well, I don't think you can build a credible case that monetary policy is tight based on current settings. You can look at financial conditions, look quite easy. You can look at inflation still running above target. You can look at the labor market. As Scarlett said, the Fed has that dual mandate, but the labor market, it doesn't look great, but it doesn't look like it's deteriorating. So I don't think you can say we're at restrictive policy setting right now. So the neutral rate is probably a bit higher than where it is right now. And then we can have a great debate where exactly that will settle in. But, I would say at least 2 or 3 basis points, 2 or 3 rate hikes above current setting on the Fed funds rate. So,
Jeffrey, what do you expect to learn from Kevin Warsh this afternoon? He doesn't want to offer forward guidance. He doesn't want to say too much. He doesn't want to submit dots. So it seems like his whole aura is, I'm not going to tell you too much. You guys go figure it out on your own.
Yeah, like I said, that's the pre-Bernanke nostalgia. I kind of like that. As a Fed watcher, though, we like to we like more information because we can dissect that and we can comment on it. So I'm actually not sure I'm going to learn much from him. Where we're learning more right now, I think the most credible voice in recent weeks has been Christopher Waller, his speech from 2 weeks ago in New York. And, he just talked about the Fed with inflation above target. You can't just sternly stare at inflation and expect it to go back to target. You have to actually take some action. So I think that's more of a clear message. I'm not sure we're going to get any improvement on that message from the Fed chair.
Is the inflation rate, is it structurally higher than the 2% that the Fed likes? I mean, make America great again, bringing manufacturing back here, maybe limiting immigration, which could push wages higher. Structurally, is it even possible to get down to that 2%, do you think?
I think so. I do. I think you have to ask yourself maybe a slightly different question, Paul. What has been providing the stickiness on core inflation in the last 6 months or so? In our view, there's been a big wild card there, which is the tech sector. Some of the pricing for accessories and software has fed through into core inflation. So that's really been the surprise. It's not really a story of immigration restriction, I don't think. The tariffs, they were in effect in 2025, not a big effect this year. So, you could argue you've had a series of these shocks that have hit. If those dissipate over time, if you don't keep bidding up the price on your gaming PC, Paul, I don't know what you're doing, pushing up those retail prices, then those price pressures will fade over time. And I think the 2% is achievable, but not in the next 6 months.
Okay, all right. So sit tight for now. Jeffrey Cleveland, chief economist at Payton and Regal, joining us from Los Angeles ahead of the Fed decision today at 2 p.m. Our Fed special will begin at 1:30 p.m., right, Paul?
Yes.
Okay.
Tom and the
surveillance team. All right. So be sure to tune into Bloomberg Radio for that. Also happening later today is the pricing of Jersey Mike's Subs IPO. Yet another Jersey name cited here on Bloomberg Intelligence. So we want to bring in Anthony Hughes. He is our U.S. equity capital markets reporter, covers all the IPOs. Anthony, what do we know so far about demand for this IPO?
Well, all of the indications so far, and this IPO has been on the road for about a week, that there's a lot of demand for this IPO, and we've reported that there's double digits or more than 10 times demand, and I believe it's somewhere a bit more than that now. So it's quite strong demand, but the IPO market's having a bit of a hangover after SpaceX, and the indications we're getting from investors is that there's a little bit of a concern that the valuation here is pretty aggressive, and even though I think this is a really strongly performing company, the sponsor here, Blackstone, is going for a valuation which it appears to be a premium to some of the comps, names like Wingstop, and on that basis, it could be that the pricing of the IPO comes in a little bit like in range or something like that, but it doesn't look like it's going to price really aggressively based on the demand that we're seeing, based on the interest.
So who's selling stock in this deal? Is the private equity ownership, was BlackRock, Blackstone, whatever?
Yeah, so it's an interesting point here is that Blackstone really only took control of Jersey Mike's in early 2025. That's when they closed the deal. And in this case, they're moving pretty quickly, and they are selling a lot of this offering is secondary. They're selling a big chunk of shares, and so is one of their co-investors. But obviously Blackstone this year has talked about this year as being the year of the IPO, and they have a number of businesses that they're looking to monetize or
Exit, basically.
Well, partially exit, at least monetize to an extent. I mean, they'll be a very large ongoing shareholder, so it's not like it's a complete sellout in this situation. But I think that the business has done well in recent years, and they're able to cash in of some of their shares at this point. But it's also a franchise-based business. So when we look at businesses like this and their need for capital, when its growth is really underpinned by franchising, then
asset light, right?
Yes, they don't really need a lot of capital as well.
So what's interesting here is that this has almost zero to do with AI. There's got no connection to AI or tech. It's more about the consumer. And there's another IPO that's pricing today as well that's also tied to the consumer. Tell us about Reformation.
Yeah, well, so Reformation is I mean, maybe you know better than I, but it's a fairly premium type women's fashion retailer or fashion maker, and
you don't shop there, clearly.
Yes, but that deal it is unusual because there's been very few consumer IPOs this year, and actually few consumer IPOs in recent years, and really a lot more of the focus this year has been on the AI trade. But I think the bankers have been conscious that the AI trade, they've sort of anticipated, I think, to some extent, that the AI trade was going to come off here after a huge run. And the sort of companies that they've been looking to take public here are not really AI related, and that's really been sort of, I don't know, it seems to be part of the plan here. If we look at the second half here, that we may see Anthropic, which obviously there's going to be a lot of interest in that, but a lot of the other deals may not be AI related as they've been in the past.
All right, the Lara silk dress on the Reformation site, $398. You flirt. The Lara silk dress is a sleeveless racerback maxi dress with a V neckline in case of keeping up appearances.
Is that a good price?
It seems kind of high to me, but I like my bargains. So.
Cocktail dress?
Can you eat Jersey Mike's?
While wearing said dress, exactly.
I like how you combine those two together.
Exactly right. All right, Anthony, thanks so much for joining us. Anthony Hughes, Equity Capital Markets reporter for Bloomberg News, joining us in our studio here. Jersey Mike's, again, founded in Point Pleasant, New Jersey, on the Jersey Shore.
Pricing this afternoon.
Yeah, afternoon it closed, and we'll see how that thing trades. Because you're right, Scarlett. I mean, it's non-AI. This is
no AI.
Bricks and mortar kind of fast food kind of thing, or
just
fast
give me a
casual, as it's called. And Mike Halen from Bloomberg Intelligence says this is a really good company when you look at same store sales, margins, and things like that. So we'll see how it goes. This is good.
Faster, smarter, better. This is Boston's best source for news on the FM dial. Bloomberg 92.9. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at ABC News.
ABC News, I'm Sherry Preston. Senator Rand Paul questioning Dr. Anthony Fauci about his response to the coronavirus, his advice during the pandemic, and its origins.
You were not a detached observer. You had an institutional interest in the public believing that federally funded research had nothing to do with the pandemic. It was a conflict of interest from the very beginning.
Fauci strongly denies the accusations, but throughout the hearing, he has been pleading the fifth, saying on the advice of his lawyers. Firefighters in southwest France continue battling that uncontained wildfire as temperatures are forecast to hit 104 degrees today. Iran launching a barrage of missiles at American forces in the Middle East. The U.S. partnering with Saudi Arabia to also hit Iran-backed militias in neighboring Iraq. Oil prices jumping back up there again amid the fighting. The markets are sinking as well. Dow down 752. Federal Reserve's Policy Board expected this afternoon to keep interest rates steady. This is ABC News.
The news doesn't stop on the weekends, and now neither do we. This is Christina Raffini. Join us on Bloomberg this weekend. Watch and listen to our new show Saturdays and Sundays starting at 7 a.m. on Bloomberg Radio, TV, and the Bloomberg Business app.
Someone had a birthday.
Yep, 50. Can't believe it.
50 years of wisdom.
Great segue. We have a health reminder from the CDC.
Pneumococcal vaccination is recommended for adults 50 or older. Says here, we're over 6 times more likely to be hospitalized with pneumococcal pneumonia than adults under 50.
I don't love those odds.
Same. Look what I found. Pfizer's Prevnar 20 is proven to help protect adults against pneumococcal pneumonia and invasive pneumococcal disease in just 1 dose, and millions have already gotten it.
Continued approval may depend on a supportive study. Don't get Prevnar 20 if you have a severe allergy to its ingredients. A weakened immune system may lower your response. Common side effects include injection site pain and swelling, fatigue, headache, muscle, and joint pain. For full prescribing information, please call 1-855-213-2138. Visit Prevnar20.com or talk to your doctor or pharmacist.
I'm on Prevnar20.com now, scheduling my appointment.
Good idea. And happy 50th.
Next week on Leaders with me, Francine Lacqua. I speak with investor and entrepreneur Amanda Stavely on the boldest deal of her career.
That was brave.
Walking away from Newcastle.
It was the toughest decision. I've made it.
And what she's looking for in her next football club.
I just want a challenge, and that's what excites me.
Listen and watch Leaders with me, Francine Lacqua, on Bloomberg Television or wherever you get your podcasts.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Surveillance Podcast, Ian Wyatt of Huntington Bank.
I don't see housing as well. There's some cuts and housing softened. I do think that matters for the consumers, especially on the rental side. If we look at where the inflation is happening in housing, if you break out the shelter components, you can see it's not really in the rental side. It's in, funnily enough, the housing component of CPI includes hotels, for example. It includes insurance. It includes all the costs of housing. Right. And so we're seeing it there, and that's skewing more upper income. So as far as lower income consumers, the average consumer, I think they do care that rents are not a big pressure right now. And for a lot of lower income households, that's a really big deal on the spending side too. And I think we're seeing that in the spending data right now, as well as that those households are still spending. But I think right now, yes, the Fed is obviously focused on inflation. The jobs picture is okay, and that's partly because those households are still spending. They had a pretty good tax cut come in. We had the refunds, and we've seen pretty solid spending data. In fact, all the recent spending data is skewing more lower income. Is actually growth is faster amongst lower and middle income than upper income households.
So does that mean the K-shaped economy, which we've talked about for so long, is that less of an issue now? It would seem that with higher inflation, it would be more of an issue.
Yeah, you'd think that. Now, I think part of it was we probably underestimated how bad rent was back in the day for these households and how much government stimulus was withdrawn, because sometimes we're somewhat separated from that.
Hear the full conversation on the latest edition of the Bloomberg Surveillance Podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. With the major averages, they are lower today. Another sell-off in chip makers dragging the S&P 500 down. It is down 60 points, 73.68. The Dow also down today. 827 points lower. That's a decline of 1.6%. The NASDAQ Composite Index down 293 points. That's a decline of 1.2%. So Bloomberg Economics says the Fed today is going to stay on hold with interest rates. That decision to Wall Street time. Ahead of that 2-year Treasury, the yield about 2 basis points higher. But that might be more of a reflection of the fact that oil prices are higher, with Brent up right now, $6.09 a barrel at 90.18. And of course, Microsoft and Meta upcoming earnings test investors diminishing patience for massive AI investments. Ted Mortensen at Bayer is among those worried about all the spending on AI.
We're going to have to raise a ton of debt and equity to really fulfill the 2027 CapEx requirements going forward.
I want to do Apple shares because, they're firmly in the $5 trillion, only the second company to reach a valuation of $5 trillion. The share is up 0.4% right now, 341.47. For a growing number of youngsters quitting their regular job to become a social media influencer, becoming a little more plausible. Really? You don't have to have a huge audience. A small but loyal audience can now generate enough income to rival a mid-level salary. Brands increasingly moving money toward the so-called micro-influencers. These are the smaller online personalities who have less than 100,000 followers. So, for instance, a TikTok partnership with a creator who has about 50,000 followers. that can run a brand more than $3,500 for a single post.
You've got to have a lot of those partnerships, though, to make that work. And if you're an influencer, you got to hustle. I mean, you got to create content daily. Can't take breaks. Can't go on vacation. You got to do it from wherever you are.
Did you take negative pills today?
No. I'm just saying.
You're poo-pooing another story of mine.
Someone close to me suggested I quit my job and that I become a podcast host talking about stuff from my childhood, like things in the 80s, like ribbon birds.
I would definitely subscribe to that. Yeah.
I was kind of like, I don't see how this works, but
then you'd have to leave us, which we're not willing to.
We can talk about 80s things here on Bloomberg Radio as part of our other stuff mandate.
We could. Yep. Anyway, we checked the markets. Stuff from the 80s. What was in the 80s? I don't even remember the 80s.
Flashdance sweatshirts, those crop sweatshirts.
I'd rather forget that.
Ribbon berets.
Right here on
Gordon
Bloomberg
Gekko.
Radio. Scarlett and Paul, back to you.
Thank you, John. Appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg.
I think I started working here in the 80s.
Yes. In the 80s. There you go. See, that's something good. Hey, the top red story on the Bloomberg terminal here is about geopolitics. Trump says U.S. will strike Iran hard as war escalates again. What happens when that happens? Oil goes up by 7%. Stocks go down. Yields go higher. The dollar rallies. We've seen this play before on both sides of the equation. Kristen Fontenrose joins us. She's a senior fellow at the Atlantic Council down there in D.C. Kirsten, thanks so much for joining us here. Again, the rhetoric coming out of the White House seems to be flip-flopping all over the place depending upon the day here. Do you see any strategy for the U.S. getting out of this situation here?
The administration is running two lanes at one time. They're running both speaking sort of softly through diplomatic channels and mostly through mediators, and then also carrying that big stick that is a recent military buildup that we've seen. Remember that there was a pause in U.S. hostile actions and U.S. kinetic actions for about 3 days. And then Iran pulled a strike on a Qatari LNG tanker. And then again, struck tankers this morning, and they've sent ballistic missiles into Jordan. So the U.S. has really been on a defensive retaliatory foot for the last several days. And Iran's the one kind of taking the more aggressive stance. So the U.S. strategy is we're open to talks. We don't really think they're serious about them. We think they're just trying to prolong these talks to give them the opportunity to build up these capabilities and strike more of our assets. And we're also going to pre-position weaponry that could be used to attack either Pickaxe Mountain, another nuclear facility, or to hit some of the bunkers that we know the IRGC leadership is hiding out in.
So that sounds like there's no real end in sight. I mean, this can go on for a long time, as anyone who's watched conflict in the Middle East knows. What's the next concrete thing that either side could try to accomplish here?
Well, if you're the U.S., you've got the legal ground, you've got the congressional authority right now, and you've got the military assets in place to make some pretty major moves militarily, if you want to. But you can also kind of take the other foot, because you can say nobody was killed in the IRGC ballistic missile strikes on Jordan last night. And that does give the U.S. president an off-ramp if he wants one. It looks to me like the leadership in Iran assesses that conducting these kinds of strikes increases their leverage in talks. That's just a misread of Washington. And, neither side is known for reading each other very well. You could also say this was a moment in time that Iran chose to make a statement during the visit of Prime Minister Benjamin Netanyahu to Washington. These strikes only happened a few hours after his meeting with Trump. So it could be a signaling measure as well. And you're also seeing Iran say, okay, our strategy is changing. We're now relying more strongly on some of our proxies. You've seen action against Saudi Arabia out of both their militias inside Iraq and from the Houthis to the south of Saudi. So they've changed their strategy. The U.S.'s strategy has changed a little bit from taking out the capabilities that are immediately striking ships in the Strait to saying we want to do more long-term damage. We want to remove their ability in terms of logistics and supply chains to present like a medium-term or even longer-term threat to that shipping. So every time Iran fires something at a U.S. or partner asset, it gives U.S. legal authorities domestically and by international law to take out as much of that supply chain as they can in a single, sortie, a single volley. So we're seeing both say we want a deal, but neither side looks like they're moving toward one. But I would say, and I know this sounds biased, but truly that the U.S. is doing more of a signaling that they're willing to have these conversations, since we're seeing Iran generally be the one to restart kinetics.
Kirsten, is there any evidence anywhere that anybody in the U.S. administration is thinking strategically at all, i.e., it doesn't look like there's going to be a regime change, which was a key goal, I think. There doesn't seem to be any opportunity to get to their enriched uranium, what it appears to be. So what are we doing? I mean, is anybody asking that question? What are we doing here? We just tit for tat?
Of course they're asking that question. And just remember that, strategies aren't always unclassified in general. But remember that the regime change was a statement by the president, but was never in CENTCOM's plan. So it was never actually a part of the strategic plans for the operation. That was only about degrading Iran's conventional military capabilities and making sure they could not weaponize their nuclear program. So if you're CENTCOM, you're thinking, we've checked these boxes off. You're telling the administration, we're kind of good here. It really comes down to how you, the executive branch, feel about the pressure the international community is placing on you to open the strait. We can leave the naval blockade on for a long time. It's squeezing Iran economically in pretty meaningful ways. But the pressure from the international community and from...
Oh, I think we might have lost her.
Yeah, technological issues.
Okay. Yeah, interesting. So that's interesting from the point she's making about regime change was never part of the CENTCOM business, I guess, battle plan or war plan. Mm-hmm. But it certainly was part of President Trump's thinking at the time. So I guess
there are a lot of things part of President Trump's thinking. At one point, it felt like he was clutching for straws and, kind of brought up everything as the justification for this conflict.
Yeah, if you're CENTCOM, it's kind of, you do what the president tells you to do. If he wants regime change, I don't care if it's in your business plan or your war plan or not. I'm not sure how that goes. So again, uncertainty here continues, and again, with the attacks overnight, we see it in the financial markets immediately. And I guess where we look first here is WTI crude oil, which is up, 7.5% here, almost $6 a barrel, and back now to $85 a barrel. And again, we closed last night's trading at below 80.
It's a reminder to the Fed policymakers who are meeting today that, you can't count out what's happening geopolitically when you're looking at inflation as they deliberate over what to do for, not just the Fed policy today, but going forward.
Yep. So we'll have to see. That's a volatile part of inflation. That's why they do it with X energy. So keep an eye on that. This is Bloomberg.
Now, your 3-day weather forecast on Bloomberg 92.9.
Slow-moving area of low pressure will impact the area through the rest of the day with some showers and thunderstorms. There could be some moderate to heavy rain at times. It's breezy and 70 to 75. Chance of showers, thunderstorms, night 65. Scattered showers and maybe a thunderstorm tomorrow, high 70 to 75. Then partly to mostly sunny Friday, highs 75 to 80. I'm Rob Carolyn with your 3-day forecast on Bloomberg 92.9.
Shape the conversation on Bloomberg Radio. Today, listen for wall-to-wall coverage of big tech earnings as Microsoft, Qualcomm, and Meta report.
This is a blowout quarter.
And now, Bloomberg subscribers can submit questions for our experts. Visit Bloomberg.com/AskRadio to send questions to our hosts.
Earnings kicking into high gear.
Your questions on big tech earnings live on Bloomberg Radio. A subscriber exclusive. Visit Bloomberg.com/AskRadio to join the conversation. Then listen at 4 p.m. Eastern on Bloomberg Radio.
Data storage used to be straightforward, but AI has rewritten the rules. The data it needs to thrive is trapped in aging infrastructure. In fact, less than half of enterprises report that their data is AI ready. That makes initiatives stall before they start. Instead of fragmented systems, companies need a unified data platform, one intelligent layer that delivers data at the speed of AI, because good enough isn't good enough in the AI era. Learn more at everpuredata.com.
Don't wait for headlines. Watch the news unfold in real time at Bloomberg's New Economy Forum, live from New Delhi, October 13th through the 15th, as global leaders come together to tackle the biggest issues shaping our future, from geopolitics and global trade to technology and the world's new balance of power. You'll have a front row seat to the conversations that matter most. Watch live at BloombergNewEconomy.com. That's BloombergNewEconomy.com.
Are you having trouble hearing? Hearing loss can devastate the quality of your life.
Now, there's an affordable fix for you or your loved one. Rated the best hearing aids of 2026 by Forbes Health, Audion Hearing has the highest quality hearing aids at the lowest prices, starting at just $98 a pair.
I actually like them better than my old $5,000 hearing aid.
I could not believe how my hearing and life changed.
Join over 1 million happy customers by going to audionhearing.com. That's AUDIEN hearing.com.
Hi, Jose Minchero here, Head of Portfolio Analytics Research at Bloomberg. Are you looking for a risk model that adapts quickly to today's volatile markets? One capable of providing accurate risk forecasts and efficient optimized portfolios, all while mitigating those pesky correlations between idiosyncratic and factor returns? If so, look no further than the Bloomberg Mac 3 risk model. Visit bloomberg.com/risk-modeling to learn more.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Great piece of research coming out of Bloomberg Intelligence in Europe. How about this? Europe needs to spend about 14 trillion euros on power, defense, technology, and critical sectors after a long period in which it benefited from cheap Russian energy, readily available American security, and low-cost Chinese goods. That's a big number. Let's check in with Tim Craighead, Global Chief Content Officer for Bloomberg Intelligence. Tim, that's a big number. What are you and the BI analysts over in London, how are you guys approaching that?
So, Paul, it's interesting. You take a step back and you think along the lines of what you set this up. Europe's stuck in the middle, or between a rock and a hard place, or whatever cliche you want to use, whether it's geopolitics, whether it's economics, security, energy, etc., between a growing U.S. dominance, a competitive threat coming from China, and what we set out as a task is it's hard to think about Europe being totally self-sufficient or autonomous, if you want to think about it. Self-reliant, but how far could we go over the next 10 years, and what would it cost in terms of investment to make this happen? And not from a top-down macro perspective. That's been done. Mario Draghi had a great report a couple of years ago setting out a trajectory or a goal. But this is bottom up, industry by industry, what legitimately can be done if the money is spent. And that's how we came up with that 14 trillion euro number.
Putting aside where the $14 trillion is going to come from for a moment here, which parts of Europe stand to benefit the most? Which specific industries, which specific companies for that matter?
Yeah, so, we certainly get into that in this report. I think there are a couple of key areas. Number one, certainly defense is high on everybody's radar screen, no pun intended. Whether it's Rheinmetall, BAE Systems, Saab, those are all defense contractors that if Europe can do a common coordinated plan and not be too nationalistic country by country, then there can be more of a very big sum that needs to be spent. The target is 3.5% of everybody's GDP to drive more Europe-reliant defense. And that's an example. We can go through energy, where the focus is more on building out renewable energy. Think about RWE as a case in point, continuing to extend oil and gas production as much as possible in the North Sea. That would be a company like Equinor, or renewable power. And here you've got Vestas in the wind area. So think defense, think energy. The other big area, I think, is in industrials. Not only Europe needs its own energy and electricity power supply, but it's a global growth business as well. And Europe is actually quite strong in that area. Think Schneider Electric, Siemens, ABB are all really big in that area. There's other spaces, but those are three big topics.
In terms of paying for it, i.e. that 3.5% of GDP, I think, when I've spoken to some folks, they've kind of feel like, all right, Germany can get there. Poland is probably incented to get there given their proximity to Russia and their history with Russia. But boy, outside of those two, I mean, Spain, Italy, Portugal, I mean, what are those guys going to do?
So it's interesting, Paul. Poland actually is above 4% already.
Okay.
That to note that they are at the sharp end of that spear.
Yep.
The 14 trillion certainly is well beyond the 750 billion euros a year in defense. There's a big chunk in technology, in defense, in energy, in various other critical inputs that come up to the 14 trillion. And importantly, it cannot rely purely on government financing. This isn't look for, some federal or pan-regional government to start ponying up. There is no budget for it. This has to be some element of private company, corporation investment, along with government incentive, policy incentives. Interesting, we get into this in the report as well. There's 11 trillion euros of deposits sitting around in people's bank accounts. Europe is not very forward when it comes to risk investment. Most people's biggest chunk of savings across many European countries is in bank deposits. So if that can be marshaled with more coordinated, open, unified markets across Europe, so it's not 20 plus individual markets, it's one uniform common market when it comes to putting forward risk capital, that's a big source of potential private investment that can be steered into profitable investment that can then generate growth. The economists in the report also have a really interesting chart looking at the current trajectory of divergence versus the U.S., which is really daunting, and how it can turn into convergence. So a lot of opportunity.
All right, Tim, great stuff. Great report. Check it out on the Bloomberg Terminal. Tim Craighead, Global Chief Content Officer for Bloomberg Intelligence. Europe needs $14 trillion reset to build power, defense, technology. Check it out on the Bloomberg Terminal. For our listeners in the U.S., a reminder, you can listen to us on satellite radio on Sirius XM Channel 121. Access the world's only global audio business and network coast to coast 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is WBOS HD1 Brookline, Boston. WNBP Newburyport. Bloomberg 92.9. Programming paid for by Bloomberg. This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Wednesday morning from the Bloomberg Interactive Broker Studio in Midtown Manhattan. We are streaming live on YouTube. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and John Tucker. We have the Fed decision coming out at 2 p.m. later today. We're going to get into all of that. We're going to talk about earnings as well. On the agenda for this hour, Andrea Felstead, our Bloomberg opinion columnist, will talk to us about how Hermes and Kering, the owner of Gucci, are moving in opposite directions, divergent paths for these luxury goods companies. Visa reported results, so we're going to check in with Diksha Gera, our global fintech and payments analyst. Brian Whalen is, going to provide our regular check-in on the fixed income markets, especially with big tech issuing a ton of debt. He's the CIO and generalist portfolio manager at TCW's fixed income group. Craig Trudell, who covers our global autos sector, will look at Ford and BMW's latest news. Ford, of course, coming out with the results. BMW firing 8,000 workers. And Danielle Booth, she is formerly with the Dallas Fed, will join us to preview that Fed decision coming up later today. But first, let's get to John Tucker with your Bloomberg Business Flash.
All right, Scarlett, thanks. Sinking technology stocks dragging Wall Street lower again. This comes ahead of the Federal Reserve decision, 2 o'clock today. Energy, best performing major industry group in the S&P 500 as oil pushes higher. Then you have the information technology, materials chemicals, and industrials, worst performing major industry groups in the S&P 500. The Philadelphia Stock Exchange Semiconductor Index down today. It is down right now close to 3%. What did you say earlier? Since it's
26%.
26%, well, almost 27% from, and that was the high only in mid-June. So that's quite a fall there. Anyway, helping to limit the stock market losses today, Apple. You'll recall they got a lot of grief earlier this year for not investing that much in AI. Maybe they look like a bunch of geniuses. Shares up 0.2%. Yeah, they're in the $5 trillion club. Only the second company to be in that stratosphere. Meta and Microsoft, of course, reporting after the close. And Morgan Stanley's Mike Wilson says spending on AI will, yes, be the key.
The market has been sending a very direct signal to the hyperscalers, and that is, if you spend more money, your stock is going down.
Right now, the S&P 500, 53 points lower, down 0.7%, 73.75 of the index. The Dow down 800 points, a decline of 1.5%. And the NASDAQ 100, 270 points lower, that is down just about 1%. And yet another reason for me to be annoyed. DoorDash gaining the necessary approvals to operate their own drones. The company gaining the, I don't know what it's called, Part 135 air carrier certification from the FAA to commercially operate a drone delivery service. So DoorDash plans to launch the drone deliveries in the fall. So
I'm still waiting for the Amazon drones that Jeff Bezos was talking about.
It's not going to be
I saw them on commercials. I never saw them in person.
Yeah, me neither.
They'll be crashing into my house at 2 a.m.
Hold on. Didn't New Jersey have a whole issue with drones?
Supposedly. Never.
No, you're talking about like a couple of, was it last year?
Yeah.
People would spot drones
Yes.
in the middle of the night
Yes.
over New Jersey.
Right.
And like,
Your neck of the
were
woods.
the UFOs?
Right. Now we're going to add DoorDash drones to that?
Yes.
Anyway. Well, at least they'll be carrying like pizza, so that's good.
So they're welcome drones, friendly drones.
Not in my house. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right, JT, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live on YouTube and streaming live at Bloomberg.com as well. As John was just reporting, we got some selling out there, folks. Let's take a look at some of the stocks that are on the move. We do that with Christine Aquino. She's in our studio. Christine, what are you looking at this hour?
All right, Paul, let's take a look at Ford. That is not being sold today. It's actually gaining. So ticker F, and those shares are up more than 4% at the moment, bearing some of its opening gains, but still a healthy clip. And of course, we know that they had second quarter earnings out earlier. Ford raised its profit outlook for the second time this year, thanks to consumers continuing to buy its high margin SUVs. Adjusted EPS was given guidance at 42 cents versus 36 cents, which was the estimate. And then they also upgraded their EBIT guidance for this year to $11 billion from $8.5 to $10.5 billion previously. Now, the company, as we know, is also investing in a new energy storage business, and they're also going to overhaul its electric vehicle strategy to focus on less expensive models. A lot of interest in that new energy storage business, of course, because it relates to being able to supply power for all of this data center AI-driven demand. But investors, of course, wondering whether that's going to be a sustainable revenue stream for Ford. So keep an eye out for that.
I tell you, Ford is doing the right thing. We're just focusing on profits. Where do we make our profits? Trucks and SUVs. If you want to go electric, you can go electric. Our responsibility is to our shareholders.
Where do you go for electric then? You go to Tesla with their old stale lineup?
I mean, they'll still have, everybody's going to have some. But you're just scaling it back because they're not getting paid for it. I totally agree with their strategy.
All right, next stock.
All right, let's take a look at Caterpillar. Yes, CAT, so ticker CAT. That is not doing too well. It's actually extending opening declines down now more than 5%. And that is because we did get a downgrade from Baird. Analysts there cutting the recommendation to neutral from outperform previously. And they also cut the price target to 900 from a previous recommendation of 1,200. And currently it's trading around 791. So analysts are citing a growing trend of state and local government action transactions targeting data centers. And the analysts are potentially saying that that could impact future orders and backlog progression. And it really just could be a limiting factor for growth that could contribute to Caterpillar's future outlook. And so, yeah, not looking very optimistic there in terms of data center regulation and the implications for a company like Caterpillar.
And Skyworks?
Skyworks. So Skyworks, ticker SWKS, they are a semiconductor device company. We know that they're a supplier to Apple. They actually derive 67% of their revenue from Apple. We got their fourth quarter earnings today. That's not looking too hot. And so the shares are down now just over 2%, bearing some of those opening declines that we saw earlier. And that is primarily because of a weaker than expected outlook for the fourth quarter. Bloomberg Intelligence weighing in and saying that, there are a lot of headwinds for handset makers because of rising memory prices and also constrained supply. And that really could limit significant upside for Skyworks in the second half of this year.
All right, Christina Aquino, thank you so much. Christina Aquino with our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market when you subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. It's all about earnings, and I know that we've got a whole slew of big tech earnings today and tomorrow, but over in Europe, they're focusing on their leading industry, which is luxury. And the luxury guys are kind of going in different directions these days.
Yeah, Hermes and the Gucci folks over there at Kering, I don't think there's a read-through there. I don't know.
Yeah, it certainly says something about China. It certainly says something about inflation. Let's bring in Andrea Felstead. She's our Bloomberg opinion columnist, writing on both. Andrea, just give us an overview here. We had heard from LVMH. Now we're hearing from Hermes and Kering. And I think I mispronounced Hermes because...
No, that's how I go.
Is that how you go? Not Hermes. In any
Hermes
case,
is Federated Hermes in Pittsburgh.
Okay, thank you.
Yes.
This is a dumb American question. Anyway, Andrea, walk us through how the tide seems to be turning here for Hermes and Kering. They're going in different directions than they were before.
Absolutely. So Hermes seems to have spooked the market by talking about China and saying that China has stabilized, but it's not yet recovered. And I mean, this isn't really that different from what everyone else has been saying. But he talked, the CEO Axel Dumas talked about the pork price, and he said that obviously we know about the property market, but he said the pork price is low, and so that's an indication of less confidence. So the market's really taken this badly. I'm worried about Hermes now. At the same time, on the backdrop of Hermes, you've also just had this sense that the Birkin, the Kelly aren't quite as hot as they used to be. Chanel has got a new design, and he's been bringing out some bags that are really, really in demand. So the Hermes and the Birkin and the Kelly, typically you can't just go into a store and buy one. You have to put your name in a wait list. There's all sort of hurdles that you get one or not. And so most people buy them in the secondary market where they cost more, and the premium to the retail price has been falling. So that's seen as maybe not a great thing for Hermes. But what's the other thing that's happened in the last few weeks is that all the footballers have been carrying these, giant Hermes bags, the giant Birkins, the Hack, which isn't a Birkin but looks very much like a Birkin. And I really do think that's actually given Hermes a new lease of life, because the Birkin was looking a bit tired, and suddenly you've got Erling Haaland carrying his giant Hermes bag, and I think it has helped them, but obviously that's not going to come through in these numbers.
Andrea, just so you know, in this radio studio, we are not buying that pork as a leading indicator issue.
Okay.
We're just not buying it. But
wait, I bought it.
Andrea, what do we know about the geographic element here? Are certain parts of the world doing better than others?
Absolutely. The US is really, really on fire when it comes to luxury. The stock market wealth, up to now anyway, the AI wealth. The US demand is very correlated with a stock market performance. Now, what is really interesting is that the people that are enjoying all this wealth, it's natural when you get a big windfall, you want to treat yourself. And that seems to favor like watches and jewelry rather than a handbag. Maybe you want something that lasts, you want a memento of this, of this wonderful windfall. It's really helping jewelry rather than leather goods. And that's a problem because obviously for brands like LVMH, Kering, although LVMH has Tiffany, and it really, its bread and butter is leather goods. So, and they're very profitable. So you really want handbags to come back. But the fact that the US is doing well, that's making up for the shortfall while China's sort of in the doldrums.
Very quickly before we let you go, Andrea, when LVMH reported results, it was really the US that was the bright spot. Is that the same for Hermes and Kering?
Absolutely. It's been right across the board, with the jewelers really shining the brightest.
Very, very good, Andrea. Thank you so much for joining us. Always appreciate getting a few minutes of your time. Andrea Felsted, she's a columnist for Bloomberg Opinion, joining us from London here. Staying on the earnings beat, Visa, our good friends at Visa, they beat estimates, but they took a $563 million charge on job cuts there. Let's get the latest on what's going on with Visa. Diksha Gera, Bloomberg Intelligence Global FinTech and Payments Analyst, joins us here. So what's the takeaway from Visa from your perspective, Diksha?
Yeah, hi there. Nice to be here again. I think it was a good set of numbers, modest beat on both top line and bottom line for the fiscal third quarter for Visa. Adjusted EPS was about 2.7% ahead of estimates. But I think what was really notable is all the underlying trends were pretty resilient. So 18% volume gains, 34% services revenue gain. I think, and all of that puts Visa in a very comfortable spot to basically meet their raised full year 2026 guidance, which they have raised to low end of mid-teens for EPS growth. I think what I'd highlight is it really was firing all engines. Value-added services was $3.8 billion revenue in third quarter, and Visa Direct, which is their consumer direct point-to-point money flows, their transactions climbed 21%, and new use cases and partnerships are kind of key tailwinds there. One thing I'd be remiss to not point out is the World Cup. It did really well for Visa's third quarter numbers, and management cited very strong volume gains across all categories. So all the US host cities, total card present spend accelerated, transactions were up 20%. You have to understand, like when people are visiting, and this is all cross-border spend, which is some of the most lucrative or higher margin business for the card network. Tap to pay transactions where people are going and using transit. So you just tap your card and move on. Your entertainment, your restaurant spend, all of that got a nice kicker. And the banks launched a lot of programs along as well to kind of bring in more consumers who were traveling for the World Cup.
Diksha, this is a dumb question, but are those buy now, pay later companies like Klarna competition for Visa? Are they friends or foes?
So here's how I put it, Scarlett. When I was covering banks, I actually thought the card networks are done with just because of all the alternative payment rails that were coming, direct fund, like bank-to-bank transfers were happening, and now BNPL is kind of growing. But if you pay attention, all the buy now, pay later companies, and I cover the sector, their best-selling product is actually a card. So the card networks have very beautifully managed to embed themselves into the buy now, pay later ecosystem as well. So while you go to an Amazon.com and spend on, say, Affirm there, Affirm is now giving you a card that you can go and swipe at a restaurant for your buy now, pay later product.
So I'm looking at these stocks, Diksha, Visa, MasterCard, Affirm. I mean, on a trailing 12-month basis, they're all kind of flattish. What's the story in the payment space here?
I think the sector overall is beaten down overall. And I think if you just look at the card networks, they're somewhere in the middle of that range. The B2B processors are the worst hit. But I think there is the overall sector has kind of been doing poorly in that regard. That said, Visa and MasterCard are steady as they go. Like, these are the most resilient, solid cash flow businesses along the sector that I cover. One thing, Paul, I would highlight, though, and we've been getting a lot of questions around that, is the 7% job cuts that Visa announced yesterday.
Yep.
And people are like, is that a distress signal? Like, what's going on? They're doing well, then why are they kind of letting people go? I would highlight that that's not Visa in distress. I would read it as modern corporate portfolio management.
Got it.
Visa's portfolio workforce actually tripled over the last decade. And what CEO Ryan McInerney is doing today, he's trimming product overhead and monetizing their AI investments.
All right, very good. Diksha, thank you so much. Appreciate it. As always, Diksha Guerra, Senior FinTech and Payments Analyst at Bloomberg Intelligence. She's based out there in San Francisco. Remember, folks, a lot of earnings after the close today. And for those tech earnings this afternoon, Bloomberg Radio is introducing a new feature exclusively for Bloomberg.com subscribers and terminal clients. Participate in our wall-to-wall coverage of earnings today at 4 p.m. Eastern Time by submitting questions for our analysts and experts to answer live on air. Subscribers can go to Bloomberg.com/AskRadio to send in questions. Then listen on Bloomberg Radio and watch on Bloomberg Originals and YouTube at 4 p.m. Eastern. So lots of good stuff going on there. We got some smart people. You can ask them questions directly, and they'll do their best.
Oh, I
to
got
answer.
questions.
Oh, yeah, I got questions.
Not about this.
Man, deep. I got a lot of questions for that fella.
Don't filter you out, John Tucker.
Exactly. We've got I think the kids say block. We'll block John Tucker.
Right.
More coming up. This is Bloomberg.
Shape the conversation on Bloomberg Radio. Today, listen for wall-to-wall coverage of big tech earnings as Microsoft, Qualcomm, and Meta report.
This is a blowout quarter.
And now, Bloomberg subscribers can submit questions for our experts. Visit Bloomberg.com/AskRadio to send questions to our hosts.
Earnings kicking into high gear.
Your questions on big tech earnings live on Bloomberg Radio. A subscriber exclusive. Visit Bloomberg.com/AskRadio to join the conversation. Then listen at 4 p.m. Eastern on Bloomberg Radio.
A new chapter in global growth is being written, and much of it is happening in Africa.
Africans need to invest. There are deals to be done and business to be won.
I'm Jennifer Zabasaja. Every week on the Next Africa podcast, we track capital flows and political shifts shaping the continent's future.
The digitalization of Africa is going to power its growth.
Ridding the world of something like HIV is possible.
Population growth is so enormous in Africa.
Listen to Next Africa on Apple, Spotify, or wherever you get your podcasts.
Is life insurance still on your list from earlier this year? Now is the perfect time to just get it done. A buddy told me that securing life insurance sooner rather than later can help you lock in lower rates for years to come. So I added this to my list this year and got it done. I called SelectQuote and was shocked at how easy and affordable life insurance is. I'm 40 and got a $500,000 policy for $18 a month. My wife's also 40, and her $5,000 policy was only $16 a month. Plus, with SelectQuote's same-day coverage, no medical exam was required, and we were covered by the time we hung up. Checking this off my list felt great, but the peace of mind knowing my family is protected feels even better.
Call SelectQuote at 1-800-280-5858 for your free quote today. That's 1-800-280-5858. Or go to SelectQuote.com. That's 1-800-280-5858. Details on example rate at SelectQuote.com.
Hello, I'm Michelle Hussein, and each week on my show, I have one thoughtful conversation that brings the world into sharper focus.
I always trust in the president. He's playing three-dimensional chess.
Every time you say something tough to Mark Zuckerberg, he looks like you killed him. I just never want to talk about Vladimir Putin again.
Every week, one conversation that helps you make sense of the moment. The Michelle Hussein Show from Bloomberg Weekend, wherever you get your podcasts.
You research your investments, you analyze markets, but have you researched your broker? For the past 3 years, Interactive Brokers' individual clients averaged a 24.3% annual return, beating the S&P 500. Lower costs, competitive rates, and access to 170-plus global markets help investors keep more of what they earn. The broker you choose matters. Interactive Brokers, member SIPC. Learn more at ibkr.com/performance.
Now, your 3-day weather forecast on Bloomberg 92.9.
Scattered showers and thunderstorms through the rest of the day. Some with heavy downpours. It'll be breezy, 70 to 75. Showers and thunderstorms are possible tonight, 65. Scattered showers, maybe a thunderstorm tomorrow. Breezy at times, 70 to 75. Showers end tomorrow night. It'll develop into a nice day Friday with sunshine and a high of 75 to 80. I'm Rob Carolyn with your 3-day forecast on Bloomberg 92.9.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Ahead of the Fed decision this afternoon and ahead of the earnings from Microsoft and Meta platforms after the close, the major averages, they are lower right now. S&P 500, 59 points lower. That's down 0.8%, 7370 on the index. The Dow is down 818 points. That's a decline of 1.5%. The Nasdaq 100, 341 points lower. That is down 1.2%. Of course, with the earnings, CapEx is going to be one of the big focuses, especially for Meta. You could argue, actually, Paul, that I guess the Alphabet set the tone when they reported.
Yes.
They had negative free cash flow.
Yep.
And some analysts are saying that they expect Microsoft possibly to have negative free cash flow later this year, I guess, the fourth quarter. As we look at yields right now, the more policy reactive 2-year is up 3 basis points, 432. Less to do with the Fed decision at 2 o'clock, but probably more reflective of oil. Brent right now up $6.72 a barrel at $90.81. No AI here, at least I don't think so. Cheesecake Factory, ticker symbol CAKE, up 11%. The restaurant company reporting better than expected traffic growth, raising the full year forecast. Best performing stock in the S&P 500. Garmin, an all-time high, up 17%. So they make the GPS-enabled products, and
all most cars have GPS, and don't you have Google Maps? And I don't understand that.
They make up other stuff connected to that, but the earnings per share guidance for the full year, they lifted that. Since you bring it up, I'll geek out. With GPS and Garmin, anybody using GPS, with the satellites, you have to take into account Einstein's space-time.
Oh, no.
Because satellites in space, they operate on a different time.
No.
Time speeds up in space.
Space-time continuum, sure. Okay.
As opposed to Earth. No, it's exactly the clocks tick faster in space.
All right.
So we age more slowly.
I just keep daylight savings time. That's all I want.
We check the markets for you all day long. No bites. Right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash, Scarlett and Paul.
All right, John, thanks so much. Appreciate it. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well today. All right, it is Fed Day today. That Bloomberg coverage starts on Bloomberg Radio and TV at 1:30 p.m. Wall Street time. Tom Keene and the surveillance team will bring all that to you. The statement at 2 o'clock, the press conference at 2:30. All that kind of, if there is a press conference, I don't know. Brian Whalen joins us. He'll be paying attention. Why? Because he's the Chief Investment Officer at Fixed Income at TCW, based out there in LA. Brian, a lot of folks are saying this is going to be kind of a unique, a little bit different Fed day here and press conference. We're just not sure what we're going to get from the Fed in terms of a decision and in terms of commentary. How are you guys reading it?
Yeah, I'd say the market's more uncertain about this one than it's been in a long time. We've obviously had a change in the leadership at the Fed, and in June, Warsh came out, came a little bit more hawkish than the market was expecting. Obviously, we've had this conflict going on for the better part of the year. Oil prices are bopping around here. People are concerned about pass-through to kind of broader, inflation metrics, although we haven't seen that to date. So, our view is that more likely than not, they're not going to go. We don't see any real kind of fundamental justification for it, just going based upon what they said last June. And, ever since then, we've had 2 inflation reports that have kind of come in much lower than feared. We had a softer labor market data come out in early July. And so, the only reason we could see them going today would be if Warsh wants to continue to kind of, beef up his anti-inflation fighting credentials. But, given we're only a few months away from the November election and what we think is kind of a dove in hawk's clothing with regards to Warsh, we expect they're not going to do a thing today.
Explain what you mean by that, a dove in hawk's clothing. What does that mean in terms of how he expresses himself when he chooses to the market?
Sure. Yeah, he look, let's go back to, when the market was underwriting a whole bunch of candidates, including Warsh, and, he's been pretty public about his thoughts that, long-term productivity gains from AI should pull down on inflation metrics. He's talked about the necessity of central bankers to look through supply disruptions, particularly in energy, and it's what we have at the moment. He's been vocal about, over the long term, wanting a smaller balance sheet, which is restrictive in nature, which means he's also, supportive of lower interest rates. So that's who we have. So I think over the long term, he expects, our interpretation of what he believes, he expects the data to support, inflation continuing to come back down toward 2% or below. And if so, he probably views interest rates at their current level as moderately restrictive. That said, he was the new guy, the new chairman coming in June. And at that point in time, over the course of the 4 to 5 months, the market went from expecting 2 cuts from the Fed to almost 2 hikes. And so we came to that podium for the first time. The market was already expecting hikes. And so, it was kind of a free option for him to kind of stay up and just kind of reiterate what the market expected. And then, he got good press for that. He kind of earned a lot of credibility. And he also did it without, disappointing the market. So if we're Warsh and we think what his mindset is like, if I believe the data will support no hikes and maybe cuts in the future, I'm just going to sit back. We'll let the data play out.
Yeah.
And if it reiterates what I expect, then we won't hike and maybe we'll cut down the road. If not, we can pivot.
Brian, I also want to get your take on credit because there's definitely been some more nervousness on the equity side. Investors are noticeably less patient in July 2026 than previous earnings seasons as companies announce their CapEx plans. When it comes to issuance, demand is starting to slow down. Bubble concerns are growing, and it feels like issuances are now becoming harder and more expensive to get completed. Is this the beginning of a real sea change? I mean, are we going to see spreads widen out a lot more than where we are now?
Yeah, look, the bond market, the corporate bond market in particular, the phrase channeling Roberto Duran, for those who remember, no mas. There is just so much supply coming to the market. It can't handle it. I just heard, the prior conversation was about, cash flow at the big hyperscalers going from positive $250 billion a year to now negative. And it's just inundating and flooding the corporate bond market with so much supply. And at first, in the beginning part of the year, was able to handle it. These were high quality issuers with fortress balance sheets, and the market wanted to kind of put that money to work, but it can only take so much. And the interesting dynamic here is that you're getting issuance from companies who, they believe in this AI story and the long-term growth prospects. And, they're thinking in terms of their equity valuation, in terms of multiples of value of where it is today. And so they turn around to the debt markets where they're looking to fund, up to almost $300 billion year to date. And that's only going to grow, and we'll continue to see it probably grow in 2027. Whether it's an extra 25, 50, or even 100 basis points in financing costs on a $20 billion transaction, I don't want to say they don't care, but they are certainly far less sensitive to that increase in borrowing costs than what we're used to seeing in the corporate bond market. So it's an interesting dynamic. It's going to weigh on the market for the rest of the year. And if what I would add in there, and that's only, we're just talking technical, supply, demand, wider yields, wider spreads, et cetera. If this kind of AI story hits a speed bump or takes a turn the market's not expecting, like maybe there's less compute, maybe there's social pressure because of the job loss, whatever the twists and turns may be, if you have a fundamental disruption on top of the supply kind of overhang, that could really cause a kind of a repricing and increased volatility across the entire corporate bond market, as well as the equity markets.
Brian, thanks so much. Always appreciate a few minutes of your time. Well, if I'm a fixed income salesperson on Wall Street, I'm not sure I want to call Brian Whalen. He's a tough call, I think. You can't get any BS behind him.
I know. He tells it like it is.
I know. Brian Whalen, Chief Investment Officer, Fixed Income, TCW. I don't think he takes any salesperson's calls anymore. Switch gears, get back to the earnings front. Ford, stock's up 5.7% today. Some good numbers here. Let's break that down with Craig Trudell, Bloomberg Managing Editor, Global Business Coverage. First question, why aren't you in London? Did you come back here?
I'm back.
Oh, okay.
I'm back.
Very good. Good. Okay, talk to us about Ford here. The stock is higher today.
Yeah, Ford and GM really consistent across several fronts. I think the fact that SUVs and pickups have been so strong in this market, the fact that the Trump administration has so relaxed emissions standards and fuel economy rules, they're really able to sort of go whole hog and sell as many SUVs and pickups as they possibly can, and that does a heck of deals a sort of heck of a boost to their bottom line.
What surprised you the most when you look at Ford and GM and what they've managed to show as they double down on what works?
Yeah, I think the execution has been strong. I think they have been trying to sort of pivot in a way that has to be really dramatic, considering the degree of change from one administration to the next. The fact that the Biden administration wanted these companies to sell a heck of a lot more electric vehicles, and they built the plants to do so. They not only built the car factories to do so, but the battery plants. And Ford has been trying to sort of, make lemonade out of lemon in the fact that Americans were not ready to buy electric vehicles at the rate everybody was hoping for. And both of these companies are trying to sort of maybe turn some of these battery plants into factories that can actually make sort of storage units, which we've seen Tesla turn that into a tidy little business. So I think there's still some sort of show there that we need, instead of just tell that they're going to be able to make that transition. But that's going to be something that we're going to watch in the months and maybe even years to come.
I mean, if I'm Ford and GM, I think I have to. This is just kind of opinion. I think my strategy's got to be maximize shareholder value. The way I do that is making pickup trucks and SUVs. And my EV strategy's got to be driven by the marketplace as opposed to policy. If that's the case, I'm not sure we're ever going to get to a big EV percentage in this country. How are they thinking about it?
Yeah, I mean, I do think it's interesting that you still do hear Mary Barra, say that she thinks that electric vehicles and batteries are just the better powertrain. And I think, candidly, if you sort of drive, in my experience, if you drive, the same vehicle, one with a battery in it and the other with a combustion engine in it, it's actually a lot of fun to drive an electric vehicle. The instant torque and the sort of, get up is actually pretty great. And I think avoiding, the gas pump right now is also a big positive. So I think they're really stuck in the situation of a lot of consumers still not being ready for this transition. And yet there is this sort of looming question over, is the rest of the world going to make this change more successfully, and will they be left behind if they don't figure this out eventually?
You just mentioned you moved back from London. I mean, looking at the cars on the road, it must be kind of a shock just to see the transition back to gas-guzzling SUVs everywhere.
I mean, the vehicles here, I grew up in Michigan, been around these companies a long time. Vehicles have always been much bigger here, but it is a sort of shock to the system to see just how big, even as someone who's covered this industry a long time, man, these pickups keep getting bigger. And I think it is also amazing for people who, go from here to London. What I hear from people, who do travel to Europe is, man, look at all of these Chinese EVs, crawling the streets of Europe and around London.
I know. It's us and the rest of the world. I don't know how it's going to play out in these
parallel
companies.
Tracks.
Yes, exactly right. All right, Craig Trudell, thanks so much. Appreciate it. He's back in the States, everybody, for better or worse. The product of Michigan State University. How about that? This is Bloomberg.
Speed, analysis, context. This is Boston's best source for news on the FM dial. Bloomberg 92.9. Coming up, the latest market-moving headlines from Bloomberg. First, an update from our partners at ABC News.
ABC News, I'm Sherry Preston. Kentucky Senator Rand Paul questioning Dr. Anthony Fauci about the origins of the coronavirus. At the time, Fauci said COVID-19 came from a market in China. His diary suggests he actually thought it may have come from a testing lab nearby.
Can you explain to the committee why you chose to fund this dangerous research in China?
On the advice of counsel, I respectfully decline to answer.
based upon my rights under the Fifth Amendment of the Constitution.
The hearing going on that way with Republicans asking questions and Fauci pleading the fifth. The Dow has plummeted today. Oil prices are back up as Iran launches a barrage of missiles at American forces stationed in Jordan. Federal Reserve policymakers are expected to keep interest rates steady at the conclusion of their July meeting this afternoon. However, most economists think they will raise rates at the next meeting in September. The Dow is down 820 points this hour. This is ABC News.
Say goodbye to old school AM radio.
Listen to Bloomberg 92.9 for speed, analysis, and global context on the biggest stories. Your best source for news on the FM dial. Bloomberg 92.9. Faster, smarter, better.
The entertainment business is changing fast. At Bloomberg Screen Time, we'll bring together the executives, creators, investors, and entrepreneurs shaping what's next in Hollywood, music, sports, and gaming. We'll talk about the biggest stories in media, like the merger of Paramount and Warner Brothers, the booming live events business, and the potential impact of AI. I'm Lucas Shaw, and I'll be hosting Bloomberg Screen Time in Los Angeles September 30th and October 1st. Join us and request your invitation today at bloomberglive.com/screentime/radio.
Are you having trouble hearing? Hearing loss can devastate the quality of your life. Now, there's an affordable fix for you or your loved one. Rated the best hearing aids of 2026 by Forbes Health, Audion Hearing has the highest quality hearing aids at the lowest prices, starting at just $98 a pair.
I actually like them better than my old $5,000 hearing aid.
I could not believe how my hearing and life changed.
Join over 1 million happy customers by going to audionhearing.com. That's AUDIEN hearing.com.
Donald Trump is shaking up the global economy.
I will sign a historic executive order instituting reciprocal tariffs,
rewriting the rules, moving markets, even rupturing long-standing alliances. To understand what's happening, listen to Bloomberg's Trumponomics podcast. I'm Stephanie Flanders. Every week, I bring you laser-focused conversations with experts from Wall Street, Washington, and beyond. Listen to new episodes every Wednesday and follow Trumponomics wherever you get your podcasts.
Bloomberg Radio, on demand and in your podcast feed.
On the latest edition of the Bloomberg Daybreak U.S. Edition podcast, Bloomberg's owner aunt joined us from Dubai on the newest fighting between the U.S. and Iran.
It is still possible that diplomacy is taking place in some shape or form. But yes, the overnight strikes carried out by Saudi Arabia targeting Iran-backed militants in Iraq really is a scary development. This is very rare since Iraq and Saudi Arabia were involved in a war about 3.5 decades ago at the time of Saddam Hussein. And it also is a sign that this conflict, unless it comes to an end, has a risk of spreading to a wider area. Iraq was not an exempt. There were clashes there before, but this is the first time that the U.S. and the Kingdom of Saudi Arabia jointly carried out attacks inside Iraq, and it comes right after Iran-backed militants carried out drone strikes targeting Saudi Arabia's oil field, Nathan.
So does this point to, as you say, a potential new phase here? I mean, we've seen Iran go after U.S. interests in Kuwait and Bahrain, Qatar and the UAE as well, but with Saudi Arabia involved now, does that take things to a potential new level?
It does. Saudi Arabia's involvement deepened about 2.5 weeks ago when it first attacked the airport in Sana'a to prevent what it said was an arms shipment from Iran to Houthis there. And that spurred tit-for-tat attacks between the kingdoms.
Hear the full conversation on the latest edition of the Bloomberg Daybreak U.S. Edition podcast. Subscribe on Apple, Spotify, and anywhere else you get your podcasts. Plus, listen anytime on the Bloomberg Business app and Bloomberg.com.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash on a day when the major averages lower again. S&P 500 64 points lower. That's down 0.9%, 73.62 on the index. Dow Jones Industrial Average down 845 points. That is a decline of 1.6%. The NASDAQ 100 375 25 points lower, a decline of 1.4%. As the war escalates again, oil pushing higher, Brent crude above $90 a barrel. Energy, the best performing industry group in the S&P 500. Two-year yield ahead of the Fed meeting today, up 3 basis points. That actually has more to do with inflation concerns related to oil. I suspect 432 right now on the 2-year. The Philadelphia Stock Exchange Semiconductor Index down again, down over 3%. And as we've been telling you, Meta and Microsoft opened their books to investors after the close of regular trading today. Spending on AI going to be a major focus. Dan Suzuki at iCapital says investors expecting quite a bit from the hyperscaler earnings.
And I think the way to think about it now is the bar is set so high, the new beat is, call it a 10% beat on earnings and a lower CapEx guidance. I think that's the thing that's going to get stocks to rally.
Okay, I'll do this one time. And this is like, I want to be done with Cracker Barrel this quarter. But Cracker Barrel, and this is serious actually, they're going to continue to cover security for the outgoing CEO, Julie Masino, for an undetermined stretch of time after she exits August 10th.
She was literally chased out of that job because of her attempts to, change up the logo, refresh it?
Yeah, well, it's a pretty rare move, but comments over the company's botched image redesign. So that's still reverberating with some, I guess, crazies out there.
I mean, they scrapped that. They're back to the original one.
Yep.
Yeah.
So the people won.
Well, she's still apparently getting threats, which is pretty serious.
It's not bothering her.
We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, John Tucker, with our Bloomberg Business Flash. We have the Fed meeting today. It began yesterday, but the decision coming out at 2 p.m. starting at 1:30 p.m. Bloomberg Radio and Bloomberg Television will bring you the Fed Decides, hosted by Tom Keene and their surveillance crew. So be sure to tune in for that. But ahead of that, we want to welcome in Danielle DiMartino Booth. She is one of our regular guests on these Fed days, CEO and chief strategist at QI Research, formerly with the Dallas Fed. And it's all going to be about what Kevin Warsh says and does, because he has brought in a new regime and he is not big on tipping his hand on how he's thinking. He doesn't really want to provide forward guidance. He doesn't want to include a dot. He claims to be about surprises. Do you think he will deliver one?
Well, he keeps talking about these good family fights. I mean, you would think that, think about Thanksgiving Day, bad family fights and badly, the uncle leaves early, but a good family fight should end well, right? So if a good family fight is ending well, then we won't see any dissents. And we're not going to see any dissents if there's a rate hike. We will see dissents if there is.
Interesting. So, I don't know, we just had, pretty big bond investor on right before you saying he thinks they're going to hold steady here today. But the market's pricing in pretty decent odds that there will be a hike. I mean, what do the fundamentals tell you, I guess?
I mean, look at Procter & Gamble. Look at waste management. I mean, waste volumes have a almost perfect correlation with GDP growth, and they fell yesterday when they reported. We're not seeing any kind of pickup. Apartment concessions are at the highest on record, according to Zillow. So we're not really seeing the pass through to the core that would suggest that these energy prices are filtering down, and part of it's just a lack of purchasing power on the part of U.S. households, which they demonstrate one earnings report after another after another. But again, if you're talking about the element of surprise, there was a 50 basis point hike during Powell's tenure. And the weekend before that surprise hike, word leaked in the media that something big was coming. So at least the bond market was not absolutely shocked. But at least it got probability north of 50%. And that was kind of the new line in the sand, if you will, that 50% line. It used to have to be above 2/3 probability. And then Powell kind of lowered it to 50%. Now you're talking about possibly lowering it to 36%. But again, breaking the mold of if markets are expecting it, they'd better price in 50% or more. If he doesn't care about how markets are interpreting Fed policy, then he won't be sitting there staring at the probability for a rate hike on his Bloomberg terminal.
Are you one of the folks that believe that he needs to cut rates in order to fortify his inflation fighting credibility?
Hike rates?
Yeah.
No, but again, I think that that's somewhat irrelevant right now. The bond market has fully priced in a rate hike. He doesn't really get penalized for hiking rates today because the bond market's done all the heavy lifting for him in advance.
Is that what he wants?
I don't know if it's what he wants. Again, what he wants is for the market to interpret the data, not for the market to interpret how Fed officials interpret the data. So he wants bond traders to grow up. I don't think bond traders want to grow up at all, and that's why they're hanging on every single word, whether it's Lori Logan or Christopher Waller, every single word that every voter is saying they're hanging on to for dear life. But I don't think Worse cares.
I mean, again, the market, you say the market's done the work for it. I think it seems absolutely correct. I mean, the 10-year 464. I mean, we're there. I mean,
the danger is if he goes nuclear.
Okay.
And goes 50 basis points or something and, immediately slams the 2's 10 yield curve into inversion. On the other hand, if you want to set up the Fed for an easing cycle and not say boo about it, when he was in Portugal recently, he said, we have the dot plot for now. Are we going to have a dot plot in September? He's not going to tell us one way or another.
Task force.
There's a task force for that. So if I wanted to shock the markets and set the markets up for an easing cycle headed into the midterm elections, today's your day.
Okay. All right. So what will you be listening for when he speaks? There's some who believe that this news conference, he's holding one, and there were questions about that a few weeks earlier, won't last very long.
I don't think it will last very long, but I will be actually, for a change, paying attention to the statement, because I'm going to want to see if there's a quid pro quo. If there's a rate hike today to make sure that the good family fight ends well, no dissents, unanimous decision, what's the quid pro quo? Does he get something on the balance sheet side? Is there something unexpected? Are the regional Fed bank presidents going to come out and make hawkish because they don't have a vote about the discount rate? I'm going to be looking at the statement today for the first time in a long time, because his baby is that balance sheet. And I know there's a task force for that too. I have great respect for Jeremy Stein. He's picked the right people, put the right people in the right place, Mervyn King, communications, et cetera.
But that's his priority, you're saying?
That the balance sheet's his priority.
What do you think he wants to do with the balance sheet?
I think he wants to make sure we never cross the Rubicon again of buying mortgage-backed securities, given the damage that it's done to the housing market, not once but twice. And there's, again, if you're talking about the element of surprise, why don't you just say, we're going to accelerate the roll-off of mortgage-backed securities, and we'll roll it into treasuries. Fine.
That's quantitative tightening, isn't it?
No, not if they roll it into treasuries.
Okay.
So they're holding the size of the balance sheet steady. They're not changing that aspect.
Just moving into something else.
Just delivering a message to markets. If you expect for us to buy mortgage securities the next time, and then corporate bonds the next time, and then the ultimate equities. He's saying, no, I'm moving the line back. We're just, if and when we're forced into a state of QE, it's going to be treasuries, and or treasuries.
All right, there we go. I might even pay attention on the train. I'll put down the movie I'm watching at 2 o'clock and pay attention.
Well, it might just be like a 15-20 minute news conference, so you don't have to pay attention for long.
All right, very good. Danielle DiMartino Booth, she'll be paying attention. She's the CEO and Chief Strategist at QI Research. We appreciate her coming into our studio. She is based down in Dallas, so we appreciate the effort, and particularly on these Fed days. I think this market's looking a little tepid right here.
Yeah.
The S&P's down 0.8%. The Dow off 820 points, 1.56%. I remember when 820 points meant something for this market. The NASDAQ down 286 points, that's 1.1%.
You have oil prices higher, so it follows that energy stocks are the group that's rising the most, up 2.5%. Then you've got consumer staples and healthcare in the green as well, so some defensiveness in equities.
Very good. More coming up. This is Bloomberg.
Now, your 3-day weather forecast on Bloomberg 92.9.
Low pressure is creeping our way. It's why we'll see some showers and thunderstorms at times the rest of the day. Heavy rain is possible. Breezy 70 to 75. Showers at times tonight. Chance of thunderstorm 65. Scattered showers, maybe a thunderstorm tomorrow. Breezy 70 to 75. Showers ending tomorrow night. Clearing on Friday. It'll be a little warmer. High 75 to 80. I'm Rob Carrollton with your 3-day forecast on Bloomberg 92.9.
Shape the conversation on Bloomberg Radio. Today, listen for wall-to-wall coverage of big tech earnings as Microsoft, Qualcomm, and Meta report.
This is a blowout quarter.
And now, Bloomberg subscribers can submit questions for our experts. Visit Bloomberg.com/AskRadio to send questions to our hosts.
Earnings kicking into high gear.
Your questions on big tech earnings live on Bloomberg Radio. A subscriber exclusive. Visit Bloomberg.com/AskRadio to join the conversation. Then listen at 4 p.m. Eastern on Bloomberg Radio.
Data storage used to be straightforward, but AI has rewritten the rules. The data it needs to thrive is trapped in aging infrastructure. In fact, less than half of enterprises report that their data is AI ready. That makes initiatives stall before they start. Instead of fragmented systems, companies need a unified data platform, one intelligent layer that delivers data at the speed of AI, because good enough isn't good enough in the AI era. Learn more at everpuredata.com.
Is passive investing costing you more than you think? Active ETFs aim to beat the benchmark, while passive ETFs just settle for them. Embrace an active strategy that helps you build stronger portfolios. Invest with a global leader in active fixed income ETFs with JP Morgan Asset Management. Visit jpmorgan.com/getactive to learn more. JP Morgan Asset Management is the brand name for the asset management business of JP Morgan Chase & Co. and its affiliates worldwide. This communication is issued by JP Morgan Distribution Services Incorporated, member of FINRA.
Well, it's official. My friends have all switched to Pure Talk because I told them they could save a bunch of money on a super reliable high-speed network with unlimited data. And because they're my friends, they trust me. As for the rest of you, well, Pure Talk understands that even though you might like me, you're not just going to take my word for it, nor should you. For that reason, and for a very limited time, Pure Talk is offering any of their plans for just $15 a month for the first 3 months, including their top-tier unlimited plan that normally sells for $65 a month. Think of it like a test drive, a super simple way to save $150 while you kick the tires on Pure Talk's blazing fast network, and a fine way to see for yourself why I switched from big wireless, along with a few 100,000 of my closest friends. Dial pound 250, say Mike Rowe, and be connected to Pure Talk's friendly U.S. customer service team. Again, dial pound 250, say Mike Rowe, and let the savings begin.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio in New York City. We're streaming live on YouTube as well. Okay, the World Cup is over. I think it was a fantastic World Cup. I think everybody was generally pretty happy. The fans seemed to be happy. The games were good. We had a great finals there. I don't know. I tell you, it's important for a lot of companies out there, none more important than Nike and Adidas. And let's break that down. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst for Bloomberg Intelligence. Poonam, just kind of scope out for us for the big name brands that were really associated with this, Nike and Adidas. Talk to us about what it means for them.
Yeah, so for both of them, the World Cup is a real big deal because it allows them to come front and center with their fans and consumers alike. So when you think about who has the ball, who has the kits, who has the teams, it matters. So when we got to the finals, Adidas had the win already, right? Because both teams were sponsored or wearing Adidas gear. So at the end of it, who won the World Cup? It's Adidas of the athleisure names, and that's great brand heat for them. In fact, they came out saying that they had expected in euros $1 billion from the World Cup kit sales and jerseys, etc., and they topped that by 50%. So 1.5 billion euros is what now the number is for the momentum they got from the World Cup on just kits and jerseys and gear ahead of it.
Yeah, I mean, we had so many games here in the New York metro area that all throughout the city, throughout the tournament here, there were jerseys all over the place and people were really into it. So do these companies, do they break out how big soccer is for them amongst all their the sports that they are involved with?
I wish I did, but or they did, but they don't. And We don't know by sport how big it is, but just as you can imagine, when you think about the world of sports, soccer is one of the largest watched and played sports in the world. So it definitely does build momentum in terms of their sales, whether it's the cleats, whether it's the apparel, the jerseys, etc. The players they sponsor matter. Messi being in the game for Adidas was a big deal. Mbappe for Nike in the top 5 running was a big deal. And these players also against the teams that they sponsor really do raise visibility for them and get to draw traffic into their stores and their brands.
Do we have a sense of if Adidas wants to sponsor, Spain or Argentina, what that costs them? Do we know that kind of number?
So those contracts vary and they change. And clearly, with Spain having won the World Cup, the price tag goes up once the contracts are up for renewal. Right now, what I can tell you is the soccer ball, which Adidas has owned in the World Cup for the last, I believe, 25 years, is now being likely taken over by Nike in 2027, 2028. Okay. So it does. So things do change when contracts expire. But for many of the teams, for many of the players, they do have various lengths of contracts and prices do vary.
How about for Nike, an American company? How did they fare in the world of global football?
It would have been nice to see Nike versus Adidas in the final, I must say, but that wasn't the case. They still did well. They were up in 3rd place, so I think they do still gain the brand visibility. In fact, some data sources that we look at, Nike was the top searched kit through April through June, with the USA averaging more than 14,000 weekly searches. So we do think that even though Nike didn't win the World Cup, they were definitely in the running and they were very visible across the board. And having Mbappe and winning 3rd, 4th place does still go a long way for them.
How about for a brand like Puma? It feels like they've kind of, at least here in the United States, a little bit of a lagging behind, say, the Nikes and the Adidas of the world. Talk to us about Puma.
Yeah, so Puma, they're definitely much smaller, right, when you think about them in the world of sports. And I think they didn't have as many teams as Nike and Adidas have, so they do lag in that front. But I think what worked out well for them on the World Cup was Morocco and Switzerland's quarterfinals, right? I think that really helped them gain visibility, and it did prove positive for them. They're missed a big turnaround right now at the brand, and they're really trying to find their place. Where does Puma sit relative to Adidas and Nike? And I think where they win is in the smaller sports that Adidas and Nike play in, but aren't as aggressive in. If you think about cricket, if you think about the F1, right? Those are sports where I think Puma has a larger leg up than Nike and Adidas, but they're smaller.
And these companies, they're not just sneaker companies, it's a whole athleisure thing, right? I mean, that's kind of where the market is now defined, or how the market's defined.
They're not sneaker companies. When you think about Adidas and Nike alike, yes, sneakers are where they probably get most of their visibility and their player lineups from. But apparel is an important piece of the business. It's growing. But when you think about Nike and Adidas, Nike wins in the footwear race, right? Nike's share is over 20% of the global footwear market. Adidas is around 12%, so almost double. But when you look at apparel, they're very comparable. Nike's about 10%, Adidas about 9%. So apparel is the opportunity for both of them to step up and really gain margin.
All right, Poonam, thanks so much. Appreciate it. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst for Bloomberg Intelligence, based down there in Princeton. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. It is Fed Day. Again, Bloomberg Surveillance, Tom Keene and the team will be on Bloomberg Radio and Television, bringing you all the analysis. That starts at 1:30 p.m. Wall Street time. The statement comes out from the Fed at 2 p.m. and then the press conference it will be at 2:30. And Michael McKee, Bloomberg's Michael McKee, he's down there in D.C. He'll be ready covering that press conference for us. S&P down 69 points. That's 0.9%. The Dow off 855 points, 1.6%. And the NASDAQ off 313 points, 1.3% there. WTI crude oil up 7.2%, $85 a barrel. There you go. We'll have more coming up. This is Bloomberg.
This is WBOS HD1 Brookline, Boston. WNBP Newburyport. Programming paid for by Bloomberg. Now, an update from our partners at ABC News.
ABC News, I'm Michelle Franzen. Tense moments on Capitol Hill. Dr. Anthony Fauci appearing before a Senate hearing on the COVID response. That hearing, chaired by Republican Rand Paul, comes after Paul released hundreds of pages from Fauci's diary, which includes the COVID-19 pandemic. The former medical advisor to President Trump during his first term, also the lead of the White House coronavirus task force, and stayed on during the Biden administration. Fauci today invoking his Fifth Amendment rights. ABC's Jay O'Brien has more.
President Biden's preemptive pardon, in the words of the chairman of this panel, Rand Paul, who would be the one making any kind of criminal referral to the Justice Department, doesn't cover future actions. It only is retroactive from the date the pardon was issued. And Fauci seemed to acknowledge that as well. So what Fauci was saying in his opening statement there is he believes that Chairman Paul is bent on putting him, in Fauci's words, behind bars.
U.S. forces across the Middle East are on high alert following surprise attacks by Iran just days after a pause in fighting was announced by the White House. ABC's Rachel Scott has details.
Saudi Arabia under fire from Iranian-backed groups in the region, shooting down drones in the eastern part of the country. Overnight, the U.S. and Saudi Arabia retaliating, striking Iran-backed proxy groups in Iraq. The first time Saudi Arabia has carried out strikes in that country since the start of the war. And in the Red Sea, the Iranian-backed Houthi rebels in Yemen claim to have struck a Saudi oil tanker, threatening another critical waterway in the Middle East.
The Federal Reserve Board is wrapping up its two-day policy meeting today. Analysts say the ongoing war with Iran, now in its sixth month, and impact on oil and gas prices could factor in whether the board could raise interest rates. At least 13 people have died in Japan following yesterday's powerful earthquake, according to Japan's Prime Minister. Crews, meantime, continue to search through the rubble of a collapsed mall in the quake zone. You're listening to ABC News.
Now, your 3-day weather forecast on Bloomberg 92.9.
We're tracking an area of low pressure that's been moving away from New Jersey, south of New England at the present time. It brought heavy rain overnight to parts of New York and western New England. It'll be bringing showers and thunderstorms our way. They'll be moving in from the south and east. Look for temperatures this afternoon to be somewhere between 70 and 75. It'll be breezy along the coast. And again, some of the rain may be heavy at times. The low will continue to bring showers and thunderstorms across the area tonight. We'll fall back to 65. Tomorrow, storms still in our vicinity, so there's scattered showers and maybe a thunderstorm during the day. It'll be breezy at times, particularly along the coast, 70 to 75. Showers finally wind down tomorrow night as the storm heads out to sea. Lows are 60 to 65. High pressure moves in during the day on Friday. We'll see abundant sunshine, and we should be somewhere between 75 and 80. I'm Rob Carolyn, and that's your Bloomberg 3-day forecast. Now back to the latest headlines from ABC News.
The American Red Cross with an urgent appeal for blood donation.
We need people to step up.
Matt Trotter is with the American Red Cross, which has declared a national blood supply emergency.
If 3 more people came to every Red Cross blood drive over the next month, we would be out of this crisis.
The nonprofit has been hit from both sides, a seasonal increase in demand for blood products and a precipitous decline in donors. Jim Ryan, ABC News.
Schools are now turning to drones to help combat active shooters. ABC's Sophie Flay has details.
The aircraft, called Campus Guardian Angel, can ram into a threat at 50 miles per hour. Mithril Defense, the company behind the drone, says they'll be stored at the schools so teachers can activate them during an emergency. But some parents are raising concerns.
They are operated remotely from Texas.
Critics also argue the drones could misidentify a threat, and they argue school resources should go towards preventing gun violence.
At least 9 schools in Florida, Georgia, and Colorado are now being equipped with those drones. A New York State school district that had planned to use a robot powered by artificial intelligence in the classroom is now putting that idea on hold. Parents and teachers cited concerns about how students' personal information would be used. The $60,000 robot named Sally is built by a company called Real Robotics, and it was supposed to be used as a teaching assistant. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Saudi Arabia enters the fight. Welcome to the Wednesday edition as the kingdom puts fighter jets in the air alongside the U.S. to strike back at Iranian-backed militias in Iraq. a pronounced escalation that is raising a lot of questions today about a wider war in the Middle East. Oil prices are up sharply as a result, and we'll discuss where we go next from here with Becca Wasser, defense analyst at Bloomberg Economics. Jay Clayton is confirmed to be the next director of national intelligence without a single Democratic vote. But President Trump's pick for attorney general could be running into the YOLO caucus, as we'll get into with our political panel. And later, our conversation with John Bozella from the Alliance for Automotive Innovation on the impact of high gas prices and the effort to keep Chinese-made cars out of America. First, though, we turn to Wall Street, where we're getting clobbered today. Charlie Pellet has the latest from World Headquarters in New York. Charlie, what's going on?
What's going on? We're seeing major losses for the Dow, the S&P, and NASDAQ. We have got oil selling off, topics you're going to be touching on right here on Balance of Power. But traders gearing up for a 2 p.m. Fed decision. Stocks lower, oil is jumping. Market also bracing results from two of the biggest AI spenders after the close of trading. We will be hearing from both Meta Platforms and Microsoft. Meta right now down 1.1%, Microsoft up by 0.3%. But let's get right to the numbers here. Big numbers to the downside. S&P is lower by 1.1% now. S&P down 80 points at 73.47. Dow Industrials down 916 points on the Dow, a decline there of 1.7%. NASDAQ Composite down 358, drop there of 1.4%. The SOX, the Philadelphia Semiconductor Index, that is dropping now by 4.9%. We've got the VIX back above 20 and a 2-year on this Fed Wednesday, 4.33%, the 10-year 4.64%, and the 30-year 5.12%. Spot gold right around $4,000 the ounce, 4,010 now, down 0.5%. But the move in crude, WTI back at $85 a barrel, up 7.2%. Brent crude $90.72, higher by just about 7.9%. Bottom line here, we are awaiting the Federal Reserve decision coming up at 2 o'clock Wall Street time. Kevin Warsh's news conference, 2:30 p.m. We'll have it for you live here on Bloomberg. So what to expect today from the Fed? Sarah Malik is Chief Investment Officer at Nuveen Asset Management, and she was a guest this morning on Bloomberg Surveillance.
My view is that we do not get a hike today. We stay in the pause camp, and the Fed communication is going to be around what's happening with this five task force, and also that they're going to be depending on incoming data in terms of inflation. And with the Middle East war going on and volatility in oil prices, it's very uncertain in terms of where inflation is going to go from here.
Nuveen Sarah Malik interviewed on Surveillance. Keep it locked in to Balance of Power, by the way, for any and all developments out of both Washington and the Middle East. I mentioned oil rallying today. Right now, crude, West Texas Intermediate, $84.99 a barrel, up 7.2%. The oil majors all surging. ExxonMobil up 3.2%. Chevron up 2.7%. ConocoPhillips up by 3.8%. Lots going on. Fed Wednesday, worth repeating that. Joe Matthew, that is a Bloomberg Business Flash.
Yeah, you said it. Happy Fed Day, Charlie. Is it going to be happy? We'll find out in a couple hours. I just bumped into Michael McKee. He had his briefcase, and he was on his way over to the Fed. Well, the Treasury is where they do this, right? But he'll be talking about this, of course, with us a little bit later on in the broadcast. We'll get, of course, the announcement on interest rates. We'll get the policy statement, and there will be a news conference today. We'll take it live as part of our special Fed coverage. That begins at 1:30 p.m., the news conference at 2:30, and we'll have all the voices you expect and trust here on Bloomberg. As we watch the markets crumble today, this is pretty ugly, with the VIX now suddenly above 20, and we're all looking at oil. As Charlie mentioned, we're above 7%, and I guess it shouldn't be a surprise based on the news that we received overnight. So thanks for joining us here on the Wednesday edition, each day feeling slightly more important than the last, even though we don't have a sense of exactly where we're going from here. But we're live for you on Bloomberg Radio. We're streaming live on YouTube, where you can dial us up by searching Bloomberg Business News Live. And we are once again straddling both ends of Pennsylvania Avenue with our eyes on the Middle East. The president will be speaking later on today. There's an event at the White House about 3 hours from now with the Treasury Secretary, and they're going to be talking about one of our favorite topics here in the Washington area, and that's how to